Welcome back to another happy hour, David. Good to see you.
Hey, how you doing? It's been a busy week. It's March. Real estate market is heating up and got a lot of stuff going on.
Absolutely. We're going to make sure I got everything done right here. Let's see.
We're going to check, make sure we got stuff going on. Yeah, we got sound.
Absolutely. We're going to make sure. All right. Let's. Done right here. All right. We should have you there. There's Cassie.
That's Cassie Mingle.
Good to see you, Cassie.
She's ready to do some condos in Nevada.
Is she really?
Yeah.
Y'all are starting to go out there, right?
Yeah, I've got some friends out there in Nevada, so I'm licensed to do loans out there. So if you need a second home in Las Vegas, do some gambling out there.
Absolutely. So how did all that work?
Well, I got a friend I went to Zenix Mortgage School with, actually, a long time ago, back in 2005 or 6.
Really?
A long time ago. And now he's a real estate agent out there, so that's exciting.
And is that an expansion of your current business? Or?
Yes, yeah. It's
so Alabama and Vegas, they go hand in hand.
Yeah, I'm just going to be helping him out with some stuff, and still Birmingham, Alabama will be the focus and the main center of business right here.
Of course.
Yeah.
But hey, who doesn't love a little Vegas? I mean, bachelor parties, mortgages, they all go hand in hand.
I can write off the trips out there.
I didn't think about that.
Yeah, business write-off.
Can you write off the losses?
I don't think so.
I don't know.
Yeah,
I doubt it.
I doubt it. Well, listen, we got a Blue Moon.
We do.
Pacific apricot wheat today.
This should be interesting. Haven't tried it yet.
I just want to point out, this is the Brinks truck of koozies. I busted this out today, special, the Orca.
The Orca? Okay. Now, what is an Orca?
I don't know, but it looks busy. I took this thing out this morning, so the beer's been cold all day.
Hey, Skip Tyler, hey, by the way, Skip Tyler, good to see you. Hope your dad's doing well. We're thinking about him. One of my high school teachers, he's one of them, but his dad is not doing too well, but one of the great men of teachers that I had in high school. And
that's awesome.
Hey, we're thinking about you, man.
Hate to hear he's not doing well, but yeah, so what do we got today? We got Dave & Buster's at Galleria, huh?
Man, can you believe Birmingham's growing up? First we get Top Golf.
Man, I'm telling you, the stuff downtown around Top Golf and all the restaurants down there is a lot of fun. I've been down there a couple of times, and it's exciting.
Well, you're actually an aficionado down in there, or whatever you want to say. You're good. You actually know how to play Top Golf game.
I know how to swing a club. It's different from knowing how to play golf.
Well, I mean, I know a lot of our friends around the country are laughing at us talking about Dave & Buster's, but, we don't really have this kind of thing.
I'm kind of surprised to see that down at the Galleria, but that's good.
It's expensive.
Yeah.
I mean, it's the stuff. But I tell you, the funniest thing I saw yesterday was, our new mayor has bright lights for the idea that he's tweeting Delta Airlines saying, come to Birmingham with your hub. I was thinking, yeah, our one runway that we have is perfect.
And we're going to handle that. Yeah, we'll handle that volume.
Yeah, it's crazy. But, hey, somebody talking about your beer, David.
There you go. Brittany Rich. See, the funny thing is, I think Michael Bruno in the office sent out an email, said that anybody that tunes in gets a free beer.
So hey.
So the beer's
on
Bruno.
It takes.
Thank you, Michael. Good man. Good man.
Absolutely. Well, you're welcome, Skip. We're thinking about them. The other thing too is about the pressure water. What drives me absolutely bananas, and I may have mentioned it before, but it still does.
I think that happens once a day, though, right?
Absolutely.
Okay, go ahead.
Pressure washing these darn overpasses. You go to Nashville, you go to Atlanta, you go to anywhere. They pressure wash the stinking overpasses and stuff like that. You talk about an easy way to make, because we're going to have potholes. Right? I mean, it's going to happen here in Alabama.
Yeah.
But just throw a little water on the overpasses and everything will be all right. And if you haven't noticed it, it's really crazy.
Is that going to make you feel better if we pressure wash the overpasses?
Yes, absolutely.
All right, so we need to call the mayor. I'm going to write that down.
Yeah, the new mayor that thought we were getting Delta.
We're going to add that to the budget.
By the way, we have Delta. We just don't have their hub.
We got it.
Right? But anyway, man, what a terrible mistake that Delta made the other day in Atlanta. I mean, hey, I don't care which side you're on. Hey, just keep your mouth shut. Because I tell you this much, they lost $50 million in tax incentives from running their mouth, about the NRA. And
I'll be honest, I didn't hear about it.
Yeah, $50 million. Hey, when was the last time you got on Southwest or Delta and really wondered, hey, I wonder what their position on anything is?
Gun control? Or...
I'm like, hey, just fly the plane.
Yeah.
Just get me there. I don't care what you do.
Yeah. See, obviously, I guess Collier watches a little more news than I do because I wasn't aware of this issue with Delta. But I'll tell you, right now we've got some stuff going on with rates. The average on Freddie Mac's site was 4.46. Now, we have leveled off since February the 15th. Finally.
Hey, finally.
Finally got a little break. So they're not getting any better, but we've stopped moving up, which is awesome. So hopefully that'll.
And we're at 4.5, right? Roughly.
Yeah, roughly about 4.5, depending on how you want to set the loan up. But yeah, hopefully we'll take a little pause on that increase so people can catch up.
What's causing it?
Well, it's basically the economic growth. I mean, we had in 2007, 2008, we had basically a collapse almost of the financial system due to a lot of practices in the mortgage industry. Since then, rates have come down. When rates come down, that puts money back into the consumer's pocket, which increases consumer spending, which gets the economy going, okay? That's what it's supposed to do, and that's what's happening. Now the economy's going, okay, so rates, everything needs to come back to normal a little bit, and those interest rates moving up is one of those things.
We knew this was going to happen eventually,
Yeah,
right?
it had to. Yeah, it had to happen. Nobody wants to see it move this fast, but everybody's still, money's still relatively cheap.
Well, it hadn't moved in 10 years, so, I mean...
Yeah, but anybody that had 3.5% 18 months ago, 12 months ago, they just can't stand to hear 4.5.
What are you saying to people that say, "Hey, I'm thinking about refinancing. I'm at 4.5." I mean, that's out the window, is it now? Or
no? I mean, they're still. I'm actually talking to somebody right now that wants to refinance, but they want to add on to the house. They want to take some cash out. I think they're at 4.25, so it might make sense for them to take that much money out to improve the value and make the house what their family needs it to be. Is a foster family, okay? So they have some foster kids that come through there, and they need the space to accommodate their family and their lifestyle. So that may make a lot of sense for them and may be a great idea. Probably not going to see a lot of refinance activity right now.
Where would you need to be right now in your mind if you're previously on a 30-year fixed? What price or what percentage should people be thinking? Hey,
usually the rule of thumb is probably 1% that you're going to drop in rate. We're not going to see a ton of that out there. So it's going to have to be situations like this. It's going to have to be different goals for your family or for you personally that you're looking to accomplish with the refinance, other than just dropping an interest rate, because a lot of the rates are going to be below 4.5%.
And what's the spread right now between a 15 and a 30-year?
Yeah, it's still typically about 3/4 of a point.
And that stays pretty steady all the time.
Yeah, but we don't see a whole lot of 15-year fixed. I think that's about, on average, about 10 to 15% of the business. So you just don't see that as much, especially when rates are moving up.
Because people just locking in.
And anybody that has... A lot of people that were on 15-year fixed or 10-year fixed before, they were probably long-term, so they're still in the house where they were wanting to pay it off. So
they were wanting to pay it off at that point. Okay. Yeah. Well, tell us about, you've seen some local banks.
Man, listen, in this business, in the mortgage business, I hear advertising and I hear stuff, and they always use keywords. They get a little tricky with the phrasing, and this one thing just kind of stuck out to me. There's a local bank here in town that was advertising on the radio a savings rate. So you open a savings account, and you get a savings rate of 2.10%.
2.10? That's amazing. Hey, I went to Auburn and barely made it out of math.
Usually,
but I know that's not right.
2.10 is the same as 2.1, but 2.10 sounds better, right? So you hear savings and 10%.
Absolutely.
So it gets the phone to ring. So I think
Hey, Heather.
I personally think it's deceptive, but kudos for their marketing team and for them getting that out there. It just kind of irks me for the client to come in not really knowing the whole story. But hey, it's probably honest. So I just thought it was funny.
Well, come on.
Funny.
But you're a banker. You're held to a higher standard of your numbers knowledge. I mean, really.
Yeah, 2.10% sounds funny, but hey,
now, hold on. You're saying that they are actually saying the words 2.10?
2.10. Not 2.1. But hey, they're getting some free press here on the Real Estate Happy Hour, so good for them.
Absolutely. Hello, Tyler. Somebody named Tyler Young's saying hi to you.
Hey, Tyler, how you doing? Thanks for joining in. Corey Smitherman Sandy Howard, man, good to see you,
and
buddy.
Heather Bush, the Lonnie Bush's
Trey
better half.
Fava, Karen, man, great to see you guys on here. So I just wanted to point out that just to be aware of those kind of tactics, and I hear this stuff all the time, but this is the information age, right?
Absolutely.
So everybody's got information, but do you have the right information? Is it good information? Okay, I want to give you an example right now of Credit Karma. You ever heard of it?
Hey, I use it.
Okay, the only reason I'm talking about it today is because I had a client call me this morning. He told me that his Credit Karma score was a 620. He had one 620, another 620, and a 615 or something.
It's odd for them to be that close.
Yeah, and I cautioned him. I said, look, I still would rather pull it. I pulled a score. The middle score was a 554. Guys, I just want you to be aware of those Credit Karma scores. They're a lot different. Do your own research on it. Like I said, the information's out there, but they use a different score than the mortgage does. I just hate to see people set up when they call me and they're thinking that their credit scores are one thing, and then I pull it, and then they're upset.
It's not, and to be very clear, it's not that they're inaccurate. They're just a different scoring model.
It's a different scoring model. It might be a little more similar to insurance scores or a car. You know, what a car company might
And it'll tell you if you're doing good or bad. I mean, that's the biggest thing.
Yeah, I would think, yes, and that's a great point, because what I typically would look at a Credit Karma or any other type of third-party consumer score, okay? That's the big difference. It's a consumer score versus a mortgage score. I would look at the ranges and say, you know what, if you're below 600 to 620 and below on those, there's some stuff to work with or to work on. I would get a copy of your own report at freecreditreport.com.
Absolutely.
Deal with the negative items. Deal with the collections.
It's not free credit report. It's annual credit report.
Okay, that's the one.
Annual credit report.
That's
free
the
credit
one.
report's going to charge you.
That's the one. Now from
Annual.
from 620, 680, 650, up into the 600s, you're probably doing pretty good.
Absolutely.
Over 700, you're in good shape. I would still prefer, me personally, to have your own report and see. But the biggest difference.
Hey, Milton.
The biggest difference is one of the things Credit Karma uses is a V3 score.
Okay, now what is a V3? That means nothing to me.
A V3 score is just a little bit different. I didn't write it all down, but I know a couple of differences. It's kind of a look back at 24 months, which could be a little deceptive, and they leave off collections.
All collections,
Yeah.
not just medical.
No.
Wow.
So that could be a big difference in some of these lower scores.
All right, Tyler said, working in the insurance industry, insurance scores are usually 1 to 50.
Yeah.
And folks always say, I have great credit. Oh, they do in every industry, apparently.
Yeah, so it could be different. So, I mean, it's just, these services are good, and they give you information. They give you a range of what your scores are. But I would recommend getting a copy of your own. And I'd be happy to pull it and give you some advice on what to do. We've got a great department in our company that handles this. They'll put together a plan for you for free. All you got to do is follow the steps.
Well, one thing I will say positive about Credit Karma, and that's, again, it's actually very good if you'll just use it correctly. You want to find out, hey, which credit cards are reporting? Which ones? I'm not worried about score necessarily. Like, my wife has this Macy's card from, right when we got married 16 years ago. I told her to close it 19 times.
Yeah.
It's still out there. It drives me bananas, right?
Do we even have a Macy's?
I don't think we do. That might be a very important thing, right?
But when she travels to New York, she's
got to have it, right?
Yeah, got to have it.
Well, but my point is, I now know I have it out there, so I need to find out why. And and then I got to call somebody like you and say, hey, do I close that because I'm about to get a mortgage? And the answer to you, I would assume, is, hey, let's don't close anything until we get closer to closing till we close.
Yeah. Well, there's a lot of factors to the credit, and it depends on where you are in life, what you're looking to do. If you're not looking to buy a house in the next couple of years or any time, you're going to act differently. You're going to do things differently. If you're buying a house really soon, then we might need to look at stuff. I think buying a car and getting credit cards, there's a little more leeway on the credit. Buying a house, it's a little more stringent. So there's a lot of things to it. So Credit Karma is a good service. It's just don't get too don't put too much on that score, and they get upset when you call me.
And I will say this too about Credit Karma: it is free, and where they're making their money, in case you're wondering, is they're making their money from offering. You'll see their advertisements and things like that for, say, another credit card or something like that. That's where they're making their money.
Yeah.
When you referral link and that kind of thing. So just use it appropriately, and then call your lender whoever. Hey, John McMillan, big Cornhusker, Nebraska, Big Red.
There you go.
We'll teach them how to play football one day, right? At least we do have, John and I actually have. We don't like the same team, so that's where we see eye to eye on that. You know which team that is. I don't want to offend anybody out there.
Yeah.
I just went to Auburn.
Yeah, we'll leave that out.
Well, you went to Georgia Tech, so you don't offend anybody.
Yeah, so.
Your basketball team offended everybody, right?
Not anymore.
Oh, they're out.
Yeah, we're done.
Did y'all win? What did y'all do? Did y'all win at all?
No.
Oh.
Nope.
Moving on. All right. Well, one thing we wanted to talk about today is the tax benefits of renting your home. Obviously we've been talking for, what is this, episode 7. We haven't really talked about anything but buying and selling.
Yes.
And one of the things that I've respected about you immensely is you got a good financial brain. And that there are some benefits from a tax standpoint to renting your home. And one thing is, too, a lot of those folks are getting mortgages with these rates so low. Yeah. Right?
Yeah. You're getting low rates on the properties that you're turning into investment properties that you're renting out to others. Yeah.
Absolutely. And one of the biggest things we can start off by saying is that the Trump tax cuts really didn't they actually are still helping, but they didn't take away anything that we've traditionally gotten as a benefit, because he took away a lot of benefits to other areas of the tax code. Right. But really, because most folks are going to form an LLC and that kind of thing. So we want to go over the different things that kind of prompt you on different deductions that you could take. Mm-hmm. One is obviously management fees. If we have a rental management company, and one of the best things is, hey, we charge very affordable 10%, but that is deductible to the owner. I mean, they're going to get to take that right off the top line as an expense. Then you get your maintenance, whatever it costs to maintain that house, because hopefully it's income producing. It's one of the big things there.
Yeah. Yeah, and I would just add to this that I know I've seen people in the past that have rental properties, and you really need to get with a CPA and talk to them about how to set this up to take advantage of all the tax write-offs to the tax benefits, because I know there's a certain threshold that if you have it just on your personal returns, that you don't get all of the write-offs. So putting it in an LLC and things like that is what you need to look into.
Absolutely. Even if you're husband and wife, what a lot of people don't realize is that a husband and wife can do a partnership LLC, because they're two different people, right?
Right.
It's not a solo. I mean, you can legitimately do it. So advertising, if you have any advertising that you do and you don't have it managed, you want to talk about the advertising. You got utilities, HOA fees.
Hey, there's Lori Valentine checked in.
Hey,
good to see you.
Hey, Lori. I hope you're doing well.
Talked to her today.
The biggest one, really, and this is from my tax attorney days, is depreciation.
Yes.
It's government mandated. I mean, the government says you must depreciate. Well, you don't have to, but when they're going to recapture all that at the end. So that's another reason to talk to your CPA. I saw people that would say, I don't want to take it. Well, the depreciation is what usually takes you from a positive number to a negative number in the current year, because you're taking it over 27 and a half. You divide essentially the value divided by 27 and a half years, and you take that amount.
And I'll tell you, the depreciation is one of the biggest numbers that we add back to your income when we're calculating income on those rental properties. Just for your information, depreciation is typically one of the biggest numbers we add back. So definitely, it's definitely a plus to have that.
Yeah, you're adding it back because it really is the government monkeying with the numbers. I mean, there's that. Travel, obviously, if you're going out to work on it. Hey, Mark Carlisle. Interest, you take a loan out. Mm-hmm. Hey, that's the beauty of it, right? And really, in this case, you form an LLC, that interest is still going to be deductible. Yeah. Trump didn't mess with that at all. It's an expense this is not just a second home anymore, right? And that's because we talked about a few weeks ago, Trump's tax code basically says $750,000 cap all the way around of any mortgages. That's not applicable related to this, especially if you have it separated like we talked about.
Right.
Insurance, the premiums that you take out for any insurance.
Ray Williams.
The insurance obviously would be deductible. Legal and professional services. Hopefully you don't need a legal, right?
So do they pay you twice for the legal and the professional?
Yeah. Well, do they go hand in hand?
Because you're a lawyer?
I don't know. That's right. No, was a lawyer, retired.
Yeah.
The other things is talking about the passive loss rules. There's certain things with that if you're a real estate professional. I'm sure whether you're a mortgage guy or not, but you can generally deduct $25,000 of these losses in a year, unless you're a real estate professional. Then you can take it up from there. And then there's some caps on that too, based on your income.
Yeah.
Let's see here. We talked about passive law rules. The other thing is too, if you have raw land, you can't depreciate raw land. Just like you can't do a lot of things with raw land, right?
Right.
I mean, that's why you guys don't put a lot of stock in the land value of stuff.
Yeah.
And why is that? Just while we're here,
because it's the value of land is going to obviously depend on where it's located. I mean, if you've got out in the country, unincorporated county, then it's not going to be as valuable as the city of Mountain Brook.
So true.
Obviously, it's going to go into the value of the property, but we don't do much. Well, I don't do any lending on land. So
because it's
obviously
typically
it adds to the property value. I did want to mention the the flippers. Buy investment property.
Yep.
Because I've got a problem right now on a loan we're working on, and it's fallen into the 90-day flip rule in FHA. So if you have owned the property for less than 90 days, and there's percentages there on how much you resell it for, like over 100%, then we cannot have that contract dated within 90 days.
Let me ask you a question on that. When you say 100%, are you saying 100% profit, or are you saying 100% of the value?
100% over what you paid for it.
So if I paid 100 and I'm selling it for 200.
Yeah, and it's a 90-day FHA flipping rule, and you need to know that because these sellers obviously weren't aware of it. They took the contract, and now we're having to hold on a couple more days, and then
And you really have to redate the contract, right? Because the contract can't even be submitted to you.
Yeah. Now we used to have to start the whole process over.
Oh, you don't anymore?
No. Now we just redate the contract and get a second appraisal. So it's just some things. I mean, when you get into a business like that, it's good to know. Obviously, every time.
Absolutely.
This is a learning experience for us on the Facebook Live. Might be a learning experience for these guys buying investment property and flipping them. But
absolutely. And by the way, I'm gonna put a link down here where you can pick up this handout that we have for you. I'll put it down below after we get off here. The other thing I want to talk about too is
Wes Wildman. How you doing,
Wes,
buddy?
We were talking about, somebody asked me the other day, who are the wealthiest of our investors? And it's funny, it was an interesting question because we have a lot of folks flipping.
Yes.
And then we have folks that buy and hold to rent, right? By far, the ones that have the most current revenue, obviously, are the flippers. They have these large bank accounts that have things, but that bank account's ebbing and flowing as they're throwing money out, right? The wealthiest, because we're talking wealth, is those buy and hold, long-term, let somebody else pay down the house.
Yeah.
They're going to be left with a ton of stuff. And this is not the stuff.
Because you're really building the equity, right?
Absolutely. You're building equity even if it's your money, right? It's like you self-funded, and then they're paying you right back for it.
Yeah, it's kind of like buying a stock that's guaranteed to go up. I mean, real estate, obviously, it has its ups and downs, but it is worth more than it was 20 years ago,
and what do you think the reason is between these guys? It's a different mindset, really.
Oh, it really is. It's really a different mindset.
Hey, Ruby.
I've had some. There's some people that had success, even in the stock market, buying and selling. But the buy and hold strategy for most people is going to create more wealth than trying to time the market. That's a difficult thing to do.
Timing is tough.
I think you're doing the same thing with real estate, but real estate is actually a little more of a tangible asset.
Well, one thing I'll tell you, a lot of folks ask us too, where is everybody buying in our area that I think there's a lot of value, and that would be Alabaster.
Okay.
Alabaster is one of those areas that has a very forward-thinking government, bringing tons of business in there, offering tons of tax incentives, and what ends up happening is we're now seeing prices start to rise because, as you know, a lot of our area had already priced in all these increases over the years. They were, can you imagine 30 years ago, that was way down the interstate.
Yeah.
Now it's really gotten to be a direct suburb of Birmingham.
Yes.
As evidenced by the traffic, with all the shopping centers and all that.
Yeah, they got some great schools.
And good value. The newest school, right? What is it? I forgot how many millions of dollars. 80 million? Something like that they spent on that school?
Yeah, so that's obviously a booming area.
Absolutely.
So there's going to be value. Anytime you get into an area like that that's growing, you're going to make money on real estate.
Yeah, and you financed a few down there for, we have a tall guy who wears a bow tie, if you know what I mean.
Yeah.
He's bought a few with you.
Yeah.
So, not trying to mention any names out here, although he would. I just don't want to out them for being a bow tie wearer, you know. But anyway, I know we want to kind of walk you through also the process, right?
Yeah, we want to talk about the process. A lot of people wondering how to get started on buying a house, what to do. This is going to be, really a lot of first-time home buyers, but anybody really now should look more into this before they jump out there. Hey, Chirocraft. Before they jump out there and jump in a car with a real estate agent looking at houses, getting pre-qualified and analyzing what the terms of the mortgage are going to be, how they affect your financial goals, looking at credit, down payment, closing costs, things like that is really important nowadays to get that out of the way first before you get in a car
you
and
go
start
out
looking
there.
at houses.
Why would you?
Yeah, it doesn't make sense. If you don't know what it's going to cost or how it's going to affect you, how much money do you want to put down? Do you have enough in retirement savings? There's a lot of things that go into that situation. It's a big financial decision. So why wouldn't you spend a little more time up front getting pre-qualified or pre-approved and going through, some conversations with a lender to say, what's this going to look like for me and my family?
Well, David, but David, I don't want you to pull my credit because you're going to kill my credit.
Man, yes. And that's funny. I had that conversation with that guy this morning that had his Credit Karma score. And I said, man,
Here it comes.
We have got to look at it. And like I knew that it was going to be off a little bit, and it was way off. So
when you say way off, where were we? Give us a range.
Now his Credit Karma score was 620. The one I pulled was a 554. That's way off.
Well, yeah. Let's be real.
That's way off.
He did not know.
No, he had no idea. He was going off his Credit Karma.
You at 550, you know something.
You should, but here's the deal. Even looking at credit, there can be differences if you have other financial goals down the road. Maybe you have kids going to college in 10 years or so, and you'd rather put some money aside for that instead of putting the 20% down. Money is still cheap right now, so let's think about that. And those kind of situations where you've got 5, 10, less than 20% down can really be affected by credit score. So maybe we've got 3 to 6 months to look at your credit profile and get those scores higher to save you some money. So go ahead and do that up front. I know people always cringe about getting their credit pulled, but it's you just have to have it. It's just a vital piece of information.
Am I wrong when I tell folks, if you're worried about getting your credit pulled, maybe you shouldn't be doing whatever you're about to do?
Well, that it's possible.
You know what I mean?
It's possible. Now, but I've seen people on both ends of the spectrum. Some that have really poor credit that don't want their credit pulled, and some that have great credit and don't want their credit pulled. Hey, Tom.
One of the great appraisers in our area.
Yes.
Most knowledgeable for sure.
Yeah, so I would just say that it's just a big piece for us to get started because it's hard for me to give you a set of numbers, and I'm assuming that maybe you've got a 750 or 760 credit score, and then it comes in at 710. So
there's a big difference, right? Because 710 to 750 is...
We're all going to be upset at, the realtor, the lender, we've all put in this time up front, and now we're all going out into the real estate world looking for a house based on these assumptions, and then we come back and we're 50 points less, and then we're all upset. And then we're going to take some time to get over that. So it just makes the process a little more difficult.
I got a solution to all this. Pay your bills on time every month.
But that's true. Things happen.
And don't co-sign loans if you don't definitely have to. I've seen that burn people more times than not.
Things happen. But after we get through that, then we go look at houses. We find an excellent real estate agent like Collier, Swecker, and the Mega Team.
That's right.
And we go look at houses, right?
Absolutely. And there's so many good agents in our area and around the country. And we go look at houses. But one of the biggest things that getting that pre-qualification does is it allows us to have an idea, a game plan, so that we are all on the same page. Look, there's nothing more than I want than to get you the most expensive house that you can possibly get. But that's not doing you a service, and it's not doing anything good because you're not going to be able to get it if it's above your price point. So knowing that information really helps the process and streamlines it.
And I'll tell you another thing is having that letter and having those finances in order right now in this market with the competitive offers and people.
It's what it is now.
So many buyers after these houses, man. You've got to have your finances in order.
Here's the thing, David. I'm leaving here in about another half hour, 40 minutes, and I'm going to be headed downtown in Crestline Park. The house already has 2 offers. They're taking all the offers tomorrow, but already has 2 offers. Already has 2 offers.
Yeah.
I mean, it's crazy.
I've seen on Facebook, I've seen realtors posting, hey, I've got clients that are looking for this. If you have anything coming up, because people are waiting on this stuff. And so as soon as they come on the market, they're gone.
But if I don't have one of the reasons I mentioned that is that if my client doesn't have, we already have pre-approval letter and stuff that's already in my possession that I'm going to be ready to send over with that offer, because my hope is that the folks with a competing offer that's close to mine don't have that information right away.
And how do you love those people that go see the house and they're like, let me think about it, I'll call you tomorrow.
Oh no, yeah, bye.
Yeah,
bye.
That's not happening. That's not happening in this
Felicia. Yeah, hey Jennifer.
Well, what's next is we write a contract.
Write the contract.
So we got a house now. Look, I've had plenty of people contact me and want to do this on their own, and let me tell you, I really try to discourage that. There are so many caveats to that real estate contract, and so many things in this process. You've got to have somebody on your side,
especially lawyers. I mean, I am one technically, but they're the worst because I'm a lawyer. I know exactly how to write. They don't understand local custom, how the mortgage companies want to see it. There's a certain rhyme and reason to why we have a lot of it standardized.
There's just things in there. There's issues with title, attorneys, home warranties, surveys, just all kinds of things that people disclose, inspections
Absolutely.
that have to happen that real estate agents are used to dealing with. It's just tough.
Everybody's favorite criminal lawyer in Mobile's back, Josh Brissman. There he is.
Dietz, good to see you. But yes, so buyers will rely heavily on your realtor to understand, negotiate all the aspects of the contract, and this is the piece where you kind of go back and forth with the seller and agree upon a price and agree upon all of these little details to make sure that everybody knows who's handling what.
And the other thing I would say is relative to the mortgage piece, he says, I'm back. Relative to the mortgage piece is there are certain ways that the mortgage company wants things written. For instance,
Tony Webster, how you doing, buddy?
The other day we had written in patio furniture. I get a call on Monday from the lender going, hey, can't have that in there.
Right.
So that's another thing. And there's a slew of things throughout a contract that need to be written so that we can get through underwriting, correct?
Yes. Yeah, and a real estate agent's going to know that, and they're going to work closely with that mortgage lender that you've already talked to prior to going to look at the house. So that relationship is important for those people, for everybody involved, to work together and make sure that the buyer's covered. Everybody's working for the buyer, right? The mortgage lender, the realtor, we're all working for the buyer. So we want to make
the seller isn't working for the buyer. I guarantee you that.
But on the buyer side,
it's got to be a win-win.
Yeah, we're on the buyer side. We're all working for you guys. We're in the business every day. You guys are not, and so we try to put our experience out there so it benefits you.
Well, and I think the other thing too is making sure when you're choosing that lender, do they understand? Because a lot of times I think that you need a lender that you know is listening to you, right? You and I talked about before we got on here about some of these lenders that aren't listening. For instance, have a client that wanted to put just the husband on the mortgage because that's all that's needed. He's the one with the primary job, whatever, and the lender's like, I don't like that. Well, who are you working for, right? You said it earlier. You're working for the buyer. If you don't feel like you're being heard, I think maybe it is a team. Go to that lender that you feel is hearing you.
Yeah, and one of our jobs is really to figure out your situation and make it work. There are plenty of people that have great credit scores and 20% down, and it's going to be a piece of cake. But there's a lot of situations that are tough. Self-employed, low down payments.
Self-employed,
different types of income. I mean, there's a lot of situations, things with the property, things that are in the contract that weren't explained correctly. I mean, there's just a lot of situations where somebody experienced in the business can help out and make it easier.
Absolutely. And then finally, once you have it, when you talk about underwriting, what is that meaning when it goes through final underwriting? Because we hear it all the time.
Well, I did want to add a little piece. We've got the home inspection, appraisal, and all that stuff that we do after we get the contract. That where the buyer analyzes the property and learns more about it. But then once we go into underwriting, we basically take all the information that we gather from you. I know you guys feel like we're asking you for everything.
Hey, Courtney.
Courtney, how you doing? You feel like we're asking you for a million things, but we put everything together. We put it into underwriting.
Hey, Mark.
And get everything cleared up.
Hey, Mark Wood, he is on his way home. He's our guy that watches on his way commute back and forth.
Yes.
So watch out for that car in front of you. Don't let them hit the brakes on you.
So that's what happens. We get everything cleared up. If underwriting has any questions, they come back to us. We bring to you. Pretty simple process. Then our funds get wired to closing.
Always wired, right?
A lot of wires happening right now, which is probably a topic for another day. But a lot of funds getting wired right now. And then all parties get together and we sign documents and change keys and do all that good stuff.
Hey, you got a question.
Okay, so how much does a buyer need to put down for a conventional loan? I know it's not 20% anymore, but a lot of buyers still think that. Right now, we've got first-time home buyers have some options at 3%. We do have an Alabama.
That's not FHA though, right?
Right. We do have an Alabama bond loan that is 100% financing, even though I don't love it for different reasons.
Is it expensive?
It is a little bit expensive, but in certain situations it works. But outside of that 3% down, Fannie Mae, for first-time home buyers, we also have another 3% down program that, depending on your situation in the area, sometimes they have income limitations. Outside of that, it's 5%. So, yeah, the 20% is really misunderstood. A lot of people think you have to get there. 5% is really common. I think there's just a large percentage of loans that are less than 10% down.
And one thing you may not know is, I mean, the first loan you did for me years ago, I think was a 93 or 92. It was some odd number.
Yes, yeah. Well, that was a different. Yeah, we were doing a different.
Is that different? That's no longer around.
We don't use that as much anymore.
Okay.
But it was a great product then.
What about the idea? You talk about these first-time home buyers. What if a spouse, somebody recently married, but one of the spouses had gotten a house before and one of them hasn't? Can they still avail themselves?
Yeah, as long as we have one first-time home buyer, then we would look at that Fannie Mae 3% down program.
That's a good. Courtney, do you have any questions?
Good question, Mark.
We got to get Courtney to ask a question.
Courtney might have a question for us.
Raise your hand, Courtney.
We probably need to ask her some questions. Huh?
We do.
But yeah, I mean, I would just go back to, if you guys have any questions on this process, it's just really important now to get the information up front and know what you're getting into.
Yeah. Now, how soon before we expected nowadays with the disclosure rules? Are they still 3 days we have to disclose and before closing, or what are the disclosure rules generally?
Yes. Now, once we take an application, we have to get that disclosure out, and that's the whole application disclosure out within 3 days of that application date. And then our closing disclosure, which are basically the final numbers, those have to go out 3 days prior.
What does that mean? When you say go out, do they just have to look at them, or do they have to sign something?
Yeah, and we typically send that out a lot sooner. And there are changes to third-party fees that are allowable.
Right.
Closer to closing within the last couple of days, but we try to get those out well in advance. But that's just basically the breakdown of the cost associated with doing the loan.
And can a buyer waive that waiting period if they want to go ahead and close?
No.
Now, why is that? Why is it? That makes no sense to me. I know it's not you, and I know it's the federal government, but why?
Because they don't want to have anybody come back and say that there was some other reason why I waived my rights. I mean, it's got to happen every time. They want to keep it. They want to make sure that buyer knows what they're getting into, because there's no right of rescission on a purchase. On a refinance, you got 3 days to think about it. After you sign, you can cancel. On a purchase, it's done.
You own it.
Yeah, it's done. So you
congratulations.
Can go back to it. So they're not going to waive that right to the 3 day rule.
And what about, as you're going through there, what about the idea on these VA and FHA inspections? How does that factor into the mortgage process? Because they're getting more and more strict, right?
Well, the VA, the inspection piece of a VA FHA really is just rolled into the appraisal. So the appraiser is going to look at certain things a little bit harder on a VA or FHA on an appraisal. So there's going to be some things, safety, health and safety issues like that.
Yeah,
broken
peeling
glass,
paint.
Exposed electrical, peeling paint, obvious stuff like that. So that's why you'll see on some houses that don't allow VA or FHA financing is because of the condition of the property.
And, if we're buying, one of the things we came up with is, out of the blue the other day, was a lender that came back and said they were buying a foreclosure. And usually it's not hard to buy a foreclosure, but they came wanting a redemption bond. Hey, Judy, the pride of Enterprise, Alabama.
Jenny Fleming.
One of the best realtors down there. Hey, Judy.
All right, good to see you, Taylor.
But talk about a redemption bond. When is that needed?
Yeah, redemption bond is needed on a foreclosure. We don't see those much anymore. We saw them a lot in years past.
Who pays for that, the seller or the buyer?
Man, that's a
negotiable item, but who do you think should pay for it?
It's a negotiable item, but it should be the seller. The seller knows if they're still in the right of redemption. So if anybody gets offended, I'm sorry. But these are the kinds of things that drive me crazy. You know if you need a right of redemption on the property. It's kind of like selling a car with no brakes.
Yeah, I agree.
You know it doesn't have brakes.
I think it's a seller cost all the way. Because here's the reason I think the seller should pay for it. Is that the seller's the one reaping the benefit of the foreclosure. They got it at a low price. I'm not saying they shouldn't make a huge profit. Not that at all. But they're getting the benefit of that, and the buyer isn't a part of that.
It's an expense. And the buyer is the one still at risk.
There you go.
The seller is not.
Courtney's talking about when the loan amount is higher than the amount at foreclosure?
When the loan amount is higher than the foreclosed amount.
Okay. Yeah, and the banks oftentimes, what they're buying at foreclosure, they're buying them for crazy numbers.
So basically the foreclosure amount, so if you foreclose on me for $200,000, then I'm going to have to bring $200,000 plus fees and expenses back to redeem the property. So you foreclosed on me for $200,000, you're going to go buy the house at $150,000. So when I bring the money back, I'm covering you, so you don't need a redemption bond. Does that make sense?
Yeah.
Because the amount of money I'm bringing back to redeem the property is more than you paid for it.
Gotcha.
So hopefully that.
And one of the best things is a lot of this. Hey, Ian, a lot of this has changed for new loans that were originated after the beginning of 2016 or 2017. They just haven't had time to foreclose yet.
Right. And the value or the quality of the loans right now is a lot higher than it was back then when we saw that glut of foreclosures.
With no doc. Oh, I made $800,000.
Yeah, the ninja loans.
Yeah, I mean, what an awesome loan. I mean, let me ask you a question. Who thought it was a good idea just to go, hey, what do you make? I don't care. We're not going to check.
If we put $70,000 a year on the application, it works. You want to go with that?
Yes.
Yeah, sure. Why not?
I don't want to pay fees either.
Give me an approval. Let's do it.
Done and done.
What do we got?
All right, so wanted to kind of talk about livability.com.
Okay. Named
Birmingham and Huntsville together, which I don't know how we're together because there's not much. I mean, we never go to the other city, but they named us one of the number 2 on their list of up-and-coming tech cities.
Oh, that's good.
It's crazy for Birmingham. I mean, that was never, I think the Innovation Depot, which is our local business incubator, has helped with that. Having UAB and having
I think it's all these new business professionals on Facebook Live that's really driving that technological advancement here in Birmingham.
Well, and I think, of course, the local microbrews
and the Brinks truck.
Yes, all right.
I got the Brinks truck of koozies here, so you don't know what I'm drinking.
Well, anyway, I wonder what it is. Omaha, Nebraska was one. So John McMillan, if you're still watching, y'all were number 1.
Isn't that Warren Buffett's hometown?
Warren Buffett, you talk about one of the best places to invest in real estate. That really is. They have schools. They have everything from industry.
Go figure.
Yeah, no, who knew?
Warren Buffett's backyard, best place to invest. Huh.
Yeah, absolutely. And the other thing I keep thinking about
news.
Every time I'm driving through a drive-through, because
I thought you were going to say Omaha. I was like,
I think about,
to Omaha?
How old is that man? That man's old as dirt. And I was watching something on the other day. He goes every day to McDonald's.
Yeah. How's that work?
I mean, hey, everybody's been fooling me. The Big Mac is the key. But anyway, Des Moines, Iowa, and St. Louis were all also
Stephanie
there.
Edge. Good to see you guys.
We need to support I tell you, where Birmingham's getting this wrong, though, it's all about small business. It's not the big business. I mean, we had that cockamamie idea that Amazon was going to relocate to Birmingham. Now, I'm not being down on Birmingham, but I'm just telling you, we didn't have a prayer's hope of getting it.
I do like cockamamie ideas.
Absolutely.
But those are fun.
But what you think about when you think about Birmingham, you think about Avondale Brewery. You think about all these
Well, you think
places.
about uptown, that area around the BJCC right now.
Small businesses.
That's really growing, and that's attracting.
I mean, name another city that's had this many American Idols. You can't name one.
No.
I mean, Diana DeGarmo. You got a question here.
There we go, Corey. With the talk, here we go. Talk of tariffs being placed on foreign imports to the U.S. in a trade war. Could that have any bearing on mortgage-backed securities in the market and co? And could it, what?
Let's see here.
Let's see here if I can see it. And could it have any impact on interest rates? Well,
that's a good question.
Here's the biggest thing I think about the potential trade war. I think a potential trade war is going to be negative, and I think that a lot of investors are going to get concerned and potentially pull money out of the market. I think you've already seen it in some steel stocks that have gotten hit. But I think they're not so much worried about the business of steel. They're worried about more
the commodity that comes out of it.
Well, they're worried about more the effects overall to the United States. So I think how that affects us overall is what investors are going to be. Because, I mean, if you get everybody else against us, right, that's going to affect more than steel prices. Mm-hmm. If everybody's mad at the United States for doing this, then it's going to affect more than steel prices. Then they're going to start doing stuff. So it's going to ripple out to other areas. And I think, yes, it's going to have a negative effect on the stock market. And I think,
But that should drive rates lower
probably will
in
drive
the mortgage.
Rates down. Negative stuff is going to probably push rates back down.
U.S. Steel could open back up. Yeah, I saw that too. Better get ready to sell some houses. Yeah, that's right. I mean, that's a benefit. What we're talking about is that, and it's quite funny.
Good question, Corey. Thank you, buddy.
It's quite funny that over the years, everybody that knows, we've advertised with Glenn Beck for a lot of years, right? And our best listenership was always in the worst of times, right? Right. And one of the reasons is that our industry tends to do better sometimes in times opposite. Now, the growth in terms of house growth, all that, but interest rates staying low, oftentimes it's when everything's going good that they go up. And when they go bad, interest rates go bad.
Yes.
In terms for the bank. They go good for the consumer.
Yes, exactly right. And then it'll be interesting to see how that stuff affects
Hey, Christina.
the psyche of the consumer, because right now the consumer outlook
Hope
is
Nashville
good.
was fun. Yeah, U.S. Steel, the other thing, too, is it's going to be very localized. See, here's the way I look at it, too, is that you're going to have a lot of people in steel country, right? They go, it's booming, it's great, the economy's back. And it's just like if it were coal, right? Everybody in West Virginia would be going, hey, this is phenomenal.
Yeah, now if it works out the way Donald Trump wants it to work out, then it's going to be a boom. It's going to be a boom for everybody.
It's going to be huge.
It's going to be huge. Yes.
It's going to be massive.
Yes. Hey,
I'm
Don
the best
Bonner.
ever, right?
Thanks for checking in, buddy.
But, you talk about like Pittsburgh and country. Here's the thing, what people don't understand is
Steel
that
Town. Pittsburgh Steelers.
Hey, the Steelers, Steel Town. They're not just, hey, Nick, big Kentucky fan. He's very sad this year. But talk about Pittsburgh, Birmingham. We're not relying on these industries anymore. And that's one thing that I think Trump has missed in this, is that he's living in a 1950s era in his head of all this industry is going to just be right back. But there's too much technology and everything's changed. And of course, I am a Trump supporter. Everybody knows me, knows that. But in this case, I think he's living in a different era with a lot more automation and a lot more innovation, right?
Yeah, I think just from what I've seen of that, I think he's just trying to even the standards that other countries trade with us on, and that's where he's going with most of this. So hopefully, it's going to translate into more jobs here and in a better trade environment, not a trade war.
And one thing I think we're seeing now too in the economy relative to all this is that interest rates relative. See, that's the thing. Everybody thinks it all is real estate related, but most of the movement in interest rates has nothing to do with real estate. It has to do with the movement of money, right?
Yes.
And we tend to think that the market's booming, therefore interest rates go up, and they're not going up because of real estate market forces. They're going up because of financial forces, right?
Right. Exactly.
And I want to remind everybody too. And you can talk about it just real briefly, is that when we hear it's not Janet Yellen anymore. I haven't gotten used to the new guy. I forget his name, the head of the Fed.
Yes.
When he says interest rates are going to move, or they move up a quarter of a point, that is not a direct correlation to the mortgage market.
Right. That's just kind of it's kind of like turning the Titanic. So that's like a little turn. Hadn't turned all the way around, but it's a little movement back in the other direction when the Fed raises their Fed funds rate by 1/4 point. Now that will eventually trickle in. They are in the same family as what I say. Like the Fed fund rate and mortgage interest rates are in the same family, but you got to think this is an overnight lending rate versus 30-year mortgage rates. So they're not directly correlated, but they do work together eventually. So when those Fed fund rates move up, so do credit card rates and other consumer loan rates, and then obviously in turn, what you're seeing right now is mortgage rates are moving up. But we had the Fed fund rate moving.
And it's a lagging indicator. Yeah. I mean, it lags way behind.
Yeah.
Right?
So we've had the Fed fund rate moving for 12 months or so, and now we're just now seeing a sustained move in mortgage rates.
And one thing you'll see in the market, and this is the same with the stock market, it's kind of like when I try to time the stock market. It's crazy, right?
Man, just wait for me to try to time it and get on the other side. And
that's true.
Killing.
That is so true.
Yes.
But you do have some great picks.
I'm the champion of calling the wrong side.
Well, you have great picks that come true either 6 months ago or 6 months after.
My picks are the best. If my money's not in it, they're good.
Yeah, but you had the idea.
But if my money's in it, they lose.
Anyway, well, I know we're going to wrap up here. One thing to tell you, hey, if you know anybody looking for a job, we are growing and we need a new executive assistant working with us.
Okay.
And if anybody knows anybody, I'm going to put a link down below. If you know anybody that's really good and wants to have a awesome Jerome Powell, head of the Fed.
There he is. Thanks, Nick.
Let us know. Hey, Rain, how are you? Hope you're doing well.
Sorry you're catching us at the end, Rain, but thank you for checking in.
Rain's always here.
Benji Wilson as well. Well, good to see you.
Rain's the strongest person on here.
But you guys, leave us some questions. Any information that y'all have, topics you want for next week or in the future, let us know what they are.
Absolutely.
Leave us some comments.
All right, guys,
Thank
we will
you for watching.
see you next Thursday at
4 o'clock.
4 o'clock. I was going to say 8, but it's 4.
Yeah.
All right.
Happy hour.
All right. Happy hour's over. See you later. Bye-bye.